Hi guys, thanks for tuning in to another episode of Nuggets News. Well, I'm super excited today to be able to discuss this report from Adamant Capital about whether or not Bitcoin has bottomed and if we're entering this accumulation zone. Now, this just isn't any old prediction. Tuur and his team produced a report in 2012 and 2015 before the next bull market. So fact-based research, this is really going to complement the more bullish scenario we outlined and that bearish scenario recently. Before we get into it though, I just want to outline a few topics that they cover that you need to have your head around these concepts. So the top 100 Bitcoin addresses and those whales that have been accumulating those holdings. The 4-year halving cycle. So Litecoin's performed really well since this video, and obviously Bitcoin's halving is also approaching. The longer term outlook. So we did a 3-part series, whether or not Bitcoin can reach $1 million, really long-term stuff, but outlining all the fundamentals and things that I see putting upwards pressure on Bitcoin's price. The adoption in developing nations, and we've already seen local Bitcoin's volumes explode in a few of these countries we outlined in that video. The cost of mining and whether or not that puts a floor in the Bitcoin price. You guys know I've got some pretty strong thoughts on all that. The number one headwind for Bitcoin and other cryptocurrencies I see is privacy. And one of the other risks they outline in this report is who is Satoshi Nakamoto. Finally, they talk about real volume, and this is important when we come to discuss forks. So OnChainFX has got far more accurate data than CoinMarketCap, and we're going to discuss that in just a second. Without further ado, let's get into this report. So the first thing they looked at here is the saving behavior. When Bitcoin goes into a wallet address, we can determine whether or not the person is sitting on a profit or loss over that given period of time. And what we see here in previous market cycles is we get some pretty extreme sell-offs when we have this capitulation, and that leads to a lot of unrealized losses. Now, human behavior, people want to hold on to those losses, okay? They want to get back to break even in their mind, and I'm sure you guys have experienced that from time to time. Recently, we didn't get to as extreme levels, but we have to remember that Bitcoin had a phenomenal run, so a lot of people made a lot of money, but we've since had a pretty big increase in price here, and people, again, sitting on some unrealized profits now from all this data. However, if we looked at the number of coins that have been lost, so likely lost or considered lost, 25% is their estimate. And that's a number that I tend to agree with, 20%, 25%. And that gives us about 3% unrealized losses. So it's all these metrics that we're going to examine that we want to reach an equilibrium. And what that means is that the buying pressure has met the selling pressure, and that's really important when we consider all the new coins coming into supply from mining, that the buyers have finally stepped up to absorb that pressure. Even if a chart looks like it's going sideways, it's something we need to be aware of. Now, the next thing we discuss here is human emotion and sentiment. You guys know how much I love this stuff. And the previous market finished in a huge capitulation here when we had that big drawdown. Recently, we didn't get to the same level, so maybe or not we have another leg down. I'll let you guys discuss that in the comments below. But we've certainly had that uptick back into the hope. And what I've noticed is a pickup on social media, a lot of metrics, whether it's YouTube views or engagement and whatnot. I think we've seen an improvement recently. The next metric they looked at was who's hodling. So a lot of people were just constantly buying throughout that period for a couple of years there, 2014 to 17. We then had a lot of people taking profits when prices started to go up. And then a lot of people buying again during the sideways action of 2018. A lot of people, myself included, thought that 6,000 was going to be that sort of grinding rounded out bottom. And obviously we had a capitulation and went a lot lower. Now, in that capitulation, we saw a huge net selling there. And now we've started to be net buys again overall. If we look at that time back in November, December, and we saw a lot of coins, old coins, move, and that was getting headlines. Whales move coins for the first time in years and that sort of thing. It does add to the fear in the market, but Bitcoin days is a metric that they've used, the number of Bitcoin in a wallet and how many days it's been there. And obviously we put more weight and more importance into a whale that's moving coins for the first time in 6 or 7 years, for example. So that was all part of that decline. We saw Coinbase reshuffling a lot of their coins as well. That added to a lot of bloat on the blockchain, which I'll talk about later as well. But there's a lot of fear, uncertainty, and doubt in the Bitcoin market at that time as well. Now, does the analysis fit the reality? And just quickly, I think you guys know this story. We had a frenzy, whether it was Bitcoin, Ethereum, altcoins, or ICOs. Everyone was euphoric. We saw ridiculous headlines, really strong opinions. Then we had that crash and a lot of hopium. As I said, I'll be the first to admit I got this wrong. I didn't think we were going to crash to such low levels because of how bullish I am on crypto long term. But we did get there, and a lot of people were in denial. There's a lot of backlash on social media. They've certainly noticed that on that one day in particular. We ended up being down 48% that month, but a lot of nasty stuff on social media. No engagement in Facebook groups anymore. A lot of people lost interest, YouTube views down. So all those metrics, they are viewing as the capitulation. So clues from the historical data. I've spoken about market cycles a lot. We go up, we go down, and we go down deep. So 2011, 92%. 2015 was 85%, and now we're at 84%. So this is very normal behavior for the crypto markets. It's on par with previous cycles. And if you want to have these huge gains, unfortunately, crypto is volatile and you have to stomach these big losses. Now, these cycles tend to repeat. I've discussed that at length, but they are getting a little bit longer and flattening, and that's because the market is mature. There's more moving parts, more investors, and so on. So it's certainly lengthening out, but that 4-year halving cycle is still really important for Bitcoin. Now, volatility decreases when we get these accumulation sideways periods. As I mentioned, buyers and sellers are at a nice equilibrium, and this is really important because Bitcoin is such a volatile asset class. The fact it recently dropped to a 5% 60-day volatility, which we haven't seen since 2016, shows us that we are reaching some sort of maturity level for the markets, equilibrium with buyers and sellers and miners and so on. So what can go wrong? What are the risks? I touched on this the other day, but an exchange hack, Coinbase or Binance, would still be pretty bad, but not as devastating as back in the day when Mt. Gox was the only Bitcoin exchange, and that really, really caused capitulation. We have a lot of new products coming out, custodians, new exchanges, and hedge funds. So if any of those get hacked, it's going to put a lot of fear in people that have used those types of businesses. So we've got to ensure that they use best practices, and I hope you guys have all got a hardware wallet and you store your crypto safely, your private key offline. The final thing that's really important if we talk about a macro view here is how the stock market's going to react. So a question we get asked a lot is, if we have a stock market crash, what will Bitcoin do? And there's 3 scenarios I see. One is a true crash where there's a scramble for liquidity and everyone has to sell everything. And if there's hodlers out there that own a lot of stocks and they get in trouble, they're going to have to sell their Bitcoin as well. The second scenario is that most people in Bitcoin aren't really that exposed to stocks, so they won't have to sell and scramble for liquidity. And the third scenario is that instead of a crash, the stock market just goes on a gradual decline over a couple of years, and people realize that, hey, there's more money printing, negative rates, and all this stuff that's coming. More people go down the rabbit hole into how money works, and Bitcoin just has that gradual increase there. So the Kate ratio here, I'm not going to talk about this too much. I'm not sure how relevant these metrics are anymore when fundamentals have gone out the window with all this money printing and low interest rates and so on. But just something to be aware of. A lot of people think that stocks are getting extended now. I think central banks are going to go crazy and surprise us even more to keep this system alive and kick the can down the road. Secondary Bitcoin mining capitulation. So there's fear about this death spiral, and I've covered this in great detail in that video I mentioned, but Bitcoin's had an 85% price decline. Hash rate hasn't really dropped that much in comparison, and the network is chugging along just fine, I believe. The network continues to become more decentralized as more people buy ASIC miners and so on. So a lot of people with free power, a lot of miners have paid off their outlay, and they're all just making profit now if they've got those free power hydro dams in China or whatnot. So look, I think the mining network is going to be absolutely fine. It would have to be a catastrophic scenario where Bitcoin's price goes down faster than the difficulty rate can adjust, and we lead to that death spiral, but I just don't see that happening. So other factors, whether or not the Mt. Gox trustee begins distributing those 140,000 Bitcoins, are they all going to sell at once? Are they going to hodl? That would certainly put some downwards pressure on price, but probably a short to medium term thing. It's not going to change the longer term outlook too much. A contentious hard fork is a recurring fear factor, as they say. We've had a lot of those forks now. Each one has become less relevant and smaller in market cap. And as I mentioned before, if you're a whale and you've got a heap of coins and you've got a heap of fork coins, there's not even the buying volume on these exchanges to sell. So if you've got hundreds of millions of dollars, it's not even worth your while because you're going to push the price to zero of a lot of these forks as well. So just something to be aware of. I think forks are going to find it harder and harder to be relevant. However, privacy is that number one headwind. And if Bitcoin is going to be hard forked to implement privacy on the base layer, that can be very contentious, particularly if Bitcoin has matured and as investment products. How are government and regulators going to react to the fact that Bitcoin can now be private? So something I'm keeping a very close eye on. So where does this all lead? We know the story of weak hands being shaken out in capitulation and strong hands, mature investors being patient, buying dips, and they're now happy to accumulate, watching this bear market playing out and seeing 85% down as a good entry point compared to those higher levels. You've all seen this Wall Street cheat sheet or these similar patterns, and once we have this grind higher and the breakout to new heights, that's when retail investors and FOMO starts and people say, hey, Bitcoin's not dead. You guys have heard that story 100 times. So other fundamentals, we know that Bitcoin continues to try to become more efficient. So they don't just want to increase the block size straight away. I know that's very contentious, guys, but they want to make it as robust and as efficient as possible with things like SegWit. Schnorr signatures is next. Lightning wallets are becoming easier to use. Lightning Network continues to grow at 45% a month. These are crazy numbers, guys. It's all heading in the right direction. I know it's frustrating sometimes that it's slow and steady, but you have to realize there's $100 billion at stake if we make a mistake. Now, sidechains as well as Lightning Network, so the liquid sidechain will allow exchanges to send Bitcoins between each other. Exchanges historically have taken up a lot of space on the main chain, so that should free up a lot of the blockchain as well. I think we're heading in the right direction. There's lots of smart people working on different solutions there. Financialization, everyone's excited about the possibility of investment products that lead to this new wave of money coming into the space. As long as they're not fractionally reserved, rehypothecated, all that sort of stuff, guys, I don't mind this. I think it's an overall net positive, but we want real world adoption. We want developing countries using this and being a store of value rather than speculation being the number one driver of Bitcoin's price. Millennials, we are the generation that have grown up with this technology. In 2029 here, we see millennials become the largest population by a percentage. So, digital money, phones, apps, it's all really familiar to this generation. And I think Bitcoin is going to become the money of the internet or some sort of world currency to some degree, and millennials are very much going to be friendly towards it. So in conclusion, we know that there's been a lot of accumulation lately. All the metrics are telling us that. A lot of things have turned up, heading in the right direction. Volatility's decreased. The fundamentals are gaining momentum. So they believe that Bitcoin could chop between 3,000 and 6,500 as that accumulation zone. Maybe a black swan event takes us to new lows. We've outlined the bullish and the bearish scenarios for you guys, but they're very positive on the infrastructure for the next 10 years. They think that Bitcoin's going to have its Windows movement at some point in the future, which is very exciting. But let me know what you guys think in the comments below. I hope you've enjoyed this video. If you have, smash that like button. Subscribe if you haven't already. Share these videos around. And thanks for tuning in, guys. Cheers.